All right, today is day number 5 of if I had to start a trading career today. Now, we did the preliminary stuff, and then the last video we did cash secured puts. And now, once you get assigned, if that cash secured put gets assigned, then you have to sell a covered call because now you own the shares. So, Neo is a good one to do because Neo was in the pits right here down at 7. Some of you may have bought Neo down here, and then it started to rise here. I bought some here at this level and this level, and then sold the 850 call. So this is a good one because it tested 10 and now it's pulling back. So now you could collect premiums on the stock that was bought down here. So I don't like Power E Trade's charting very much. It's small and it's, I don't know. I like Think or Swim better on the charting, but go to this trade lab here, and I don't think there's anything better than this trade lab on Power E Trade. So here's Neo for today. Build a strategy. It I don't know why it defaults to this, but I always close it out, and I want to start fresh with a fresh screen. Add an option. Sell. Let's say you want it to. It's at 916, so let's say you want to sell a covered call at 950, just in case it tests that. And look, there's 1% premium, but not very much. So let's say you got in at 850 and you don't mind selling in the money at 9. So you'd collect $30 if it expired worthless on Friday. Let's say it doesn't stay over 9. Let's say it dips below 9. Then you don't have to sell anymore. Call is a promise to sell your shares at $9. It's currently trading at 916, so that would be in the money. If the market closed today, you would have to sell at 9, even though it's 917. Okay, but you're collecting $30, whereas if you sold right now, you would only collect $17 at the 9. If you sold right now. So here's the covered call strategy. Let's save the strategy. And if you look here, max profit is $31. Max loss is infinite. Now, the reason why max loss is infinite is because the stock Neo there's infinite upside potential. So if it went to 200, you'd be on the hook for selling at $9. But this is assuming you don't have the stock. And this is why it's infinite. But you do have the stock, and that's why it's a covered call. So in order for you to actually look at this strategy correctly, you would have to have 100 shares right here. And here it would say you're at 915 because that's what it's currently trading at. So this isn't perfect because you may have bought at $8. So it's not going to show your upside potential. All it's going to show is that you have downside protection. So see how it changes. So now your max loss is only 885 instead of infinite. And the reason why is because you sold for that premium and it takes that off your cost basis. So instead of 915, now your cost basis is 885 because of that $30. Okay, and the only max profit here is because you're selling. It says you bought it at 915, and you sold a call for $30, which means that's the difference here. Is the max profit is 15. So your max profit is whatever it's trading at right now, minus the cost basis. So let's say you bought it at $8, and you sell it at 9. That's $100 upside potential plus the $30. Okay, so this is how you look at a covered call. Now, covered call, if you go to trade right now, it'll buy the 100 shares. So you don't want to buy the 100 shares. You just want to evaluate it using 100 shares. So I could take this off right now. And if I already have shares, this will go through as a sell a call. So it'll be a covered call. It'll match up with your current shares, and then it'll be a cover call on your position. And that is the covered call strategy. Day number 5, step number 2 in the wheel